Welcome back to another episode of Gimme Some Truth. Clint and I are in the booth. This is not often that you and I just get to be in the booth together. So this is a fun kind of harkening back to olden days when we used to just do this, the two of us.
What a treat.
A lot of headlines, a lot of new things happening in the country, how that affects the markets, a lot of I'll call it trepidation. Hard to pick up a newspaper or look at a website and not see something that screams at you. So this morning we thought, let's talk about some of these, what we'll call 2025 topics or things that may happen by way of politics into the markets and what we think might be a result of that.
That's great. Before we get into that, I do want to share with you one little tidbit that I caught over the weekend here. I just learned that Christopher Walken has never owned a cell phone.
That's fantastic.
Yeah. I mean, can you imagine like going around in life? He said that if he ever needs to make a call or whatever, he just asks somebody to borrow a phone, which means that he has to memorize numbers, which who does that anymore?
Such a think of how freeing that would be. It's such an interesting, like maybe not better, but just like an incredibly freeing way to like go through life, which is just a very, I don't know. You have to almost stop and kind of think about like, wow, what would your life be like?
So they were talking about how they were doing, he does Severance, and he said that they were nice enough to send him DVDs when Severance got finished because he can't just view it on any sort of device because he doesn't have any device or cell phone or anything. So he just watched himself because they basically said, how do you prepare? And he's like, well, it was nice enough that they sent me DVDs.
It's funny because I think just the concept of genius is such an interesting thing for me. I think about it actually probably more than I probably should, but it just comes in so many interesting forms, and it looks so different than how a lot of us traverse through life. I had heard like Daniel Day-Lewis like doesn't have a concept of time. Like he doesn't think about days and months and things like that. He just does what he does. And then when he's ready to do another project, he's like, okay, I'm ready. And then like, it's not, I'm going to do another project in a month. That he doesn't think like that.
That must drive a director crazy.
It's got to, yeah, right. You're right. But I guess that's one way to do it.
Well, we're not going to start doing that with our clients.
No, that would be interesting though.
You know, just tell them just to show up whenever you want. And
for 1 week, let's do that and see what happens.
That's great. So, you know, also stuff in the news, you know, we just had something called DeepSeek. Just break the world just over the weekend. So for those that might not be aware, DeepSeek is an AI client, kind of like ChatGPT, Gemini, etc., whatever the meta one is. What is that, Llama or something like that? Some terrible name.
Yeah.
So something like that. But anyways, DeepSeek basically is an AI client that is basically on the equivalency of a ChatGPT or a Gemini, using a lot less compute power and GPUs than these others. And why that's important is that a lot of these companies have spent astronomical amounts of money building out data centers, building out all of these different kind of supercomputers or sets of GPUs together and stacking them all on each other, buying these Nvidia chips, and with the anticipation that you are going to need all this power to power these models. And what DeepSeek showed is it's an open source sort of code, and they're showing that you could do a lot of AI with a lot less compute power than previously thought. And so the models have been tested, and there's some skepticism over whether or not it actually cost only $5 million to do this. A bunch of skepticism saying maybe there's a little more compute power in the background that they're kind of, you know, advertising. But it's pretty game changing in the AI situation, because maybe we won't have to spend all the money on these really expensive Nvidia chips, these Blackstone GPUs, these chips, all of this stuff that powers us. Maybe it won't have to be as expensive or as energy dependent as we once thought, which would be a good news for people that are more green energy people, because AI is incredibly resource intensive.
Yeah.
So why?
Probably way more than people realize.
Way more. Like AI is going brown. Like this is not green at all. You know, you do a query on ChatGPT or Gemini, and the compute power used in that is astronomical. Just the the heat that it produces, just the energy that it utilizes, all of that is really actually quite bad for the environment. So getting these scaled down to lower models that don't need as much compute power would be really impressive and hopefully possible. So, Nvidia's chip, it fell by like 17% in a day.
Yeah.
That's my largest holding. Very sad about that. But it is a situation where, and many of us have large concentrating holdings. And I think that's where, some of this in the technology sector becomes a concern. And so, we saw this pullback kind of starting post-election. We saw a run up and then a pullback, and then it ran back up and now another pullback. And people are increasingly becoming concerned about a couple different things. So number one would be the incoming administration. If you aren't a Trump fan, a lot of concerns. And then also from a perspective that we look at valuation.
Yeah, I think the DeepSeek is a very unique situation because it kind of came out of nowhere and kind of caught a lot of people off guard. But I think if you look at it from a bigger, more historical standpoint, it shows you that it kind of doesn't matter what the disruption is when you've had a market that's the way it is right now. It doesn't, and I'm not minimizing DeepSeek, but it doesn't take much for kind of the table to get shook a little bit. And I think that's what you're seeing, and that's what you saw these last couple of days. And I think it's maybe a call out to people that have been hearing over and over and over Magnificent Seven, the top companies, and almost have kind of lost sight of like, yeah. So they're, basically the top 9 companies in the S&P 500 are tech companies now, and kind of who cares? This is why you should care, because I think a lot of people don't realize that their portfolio has gotten incredibly tech heavy, whether it was by design or by coincidence. And it's not going to take much for that to get shook up a little bit. And I think that DeepSeek might be the maybe not the canary in the coal mine, but you might want to be a little careful and take a look at your portfolio, because 2025 could have more disruptors like this for the tech sector.
Yeah, if you're a believer in index funds, which we are in many cases, but if you're big and heavy into index funds, one grave concern that I would have at this point is truly the concentration.
Yeah.
Because most indexes are market capitalization weighted, as these companies become larger, they become larger in the indexes, and these larger companies happen to mostly be all technology companies, or they've kind of spun off into other categories to make it look better. But is Amazon really a retailer, or is Amazon really a technology company? You could argue both, and so there's so much technology in the S&P 500 and in the top of the S&P 500 that if you are doing that, and like a lot of our clients or normal people out there, okay, I've got my own portfolio, then I got my play portfolio, and my play portfolio has all tech in it. And so then you look at how much concentration you have in these areas, and it can be astronomical. So just because you have 12 different stocks, if they're all technology companies, you really don't have any diversification.
Right. Well, and to that point too, is Tesla a tech company or a car company? I argue it's a tech company, honestly. I think it's a tech company that makes cars. That's, it's almost like GM was before it got really ugly for GM. GM was a healthcare company when it went out of business. It wasn't a car company. It was a healthcare company that made cars, because that's how big their obligations got to the people that benefited from that. So I think it's understanding. It's important to understand kind of what these companies are and what they're made up of. But to your point, and let's take a step back on that market cap weighted index, what does that mean? The garden variety S&P 500 index has the biggest company as its biggest holding, and then the second biggest company is the second biggest holding. It doesn't have equal weighting amongst all 500 companies. To that point, the 500th company in the index has a very, very, very minute impact on the overall index, as opposed to the top 10 or the top 20 companies. So it's important to understand how an index is constructed and constituted, because if we all own garden variety S&P 500 funds right now, we all basically own tech funds.
That's right. Highly, highly concentrated in that area. So, we look at price to earnings ratios, and that's really the marker that we look at for how expensive or cheap the index is. The index is quite expensive, historically speaking.
Right.
I think I just saw a number around 27 in that. Historically speaking, it's been much lower than that. Sometimes the S&P is as low as, 14, 15, 16. If it's a little bit overvalued, you usually have it, kind of in that, upper teens. Maybe it hits a little bit 20 or older. We're well into what you would say is a benchmark for overvaluation right now. Now, that doesn't mean you should go out and sell all your stocks or anything like that. It just means there are periods of time where, we hit this overvaluation and, are you going to chuck a whole bunch of extra money in there if you had it sitting in the sidelines? Right now, as we've always said in all of our meetings, we're always cautiously optimistic. We love stocks for the long haul. Right now, we're a little more cautious than optimistic.
Yeah, I think it's just it's really a time when you need to understand what you own. You just really have to understand what's in your 401k, what are in your IRAs, what makes up those investment portfolios. It's just one of those times you kind of need to know what you got, and if you don't, you could lose a lot more than what you thought you could because of how your portfolio has grown. And I think that's one thing that people don't understand is if you think of your portfolio as a pie, those slices don't stay the same size. As a matter of fact, they move literally every day. And so you can become more aggressive even though you haven't made any changes to your portfolio. And I think that's what a lot of people don't realize.
If you had a pie slice that was getting bigger, what kind of pie would you want it to be?
Well, I love pie. That's for me, like cake is fine, but pie is where it's at. And for the most part, it's fruit pies that I'm a big fan of. I tend to like the berry pies are fantastic. Blackberry, raspberry. And I'll even go as far as saying cobblers are pretty fantastic as well. Although peach starts to get me into a world that I'm not as, I like a peach. I don't want a peach in a pie. That to me is a little.
That's one of the only times when I do eat peaches, and they're delicious. And I think you're wrong about that. And cobbler is not pie.
Okay. Well, it's not pie, but it's closer to pie. It's closer to pie than cheesecake is.
Fair. We'll have to unpack that one other time. And I'll go with key lime pie is the best pie. But I
agree. Maybe not the best, but that's way up there. That's
way up there. Yeah. And also, you got to make your pie crust with lard.
Yeah, that's an old school. That's one of those old school things that you kind of have to. I read that McDonald's used to fry its French fries in beef tallow.
Yeah.
And they don't anymore. And it's changed the flavor. People have noticed that it's different because they don't do that anymore. But
I think they probably go back to that. And that's because, maybe it's an RFK Jr. thing if he does get confirmed. And I think that, is a parlay into conversations we've been having a lot with clients. Frankly, we have to be politically agnostic in these four walls. So we have to look at it from a bunch of different ways. And there's a lot of trepidation in people that are not happy that the Trump administration is coming in, and they're very concerned about what's going to happen. And we have to allow people to take a step back, and the emotion is important in there, and that's all political. But when we take a step back and look at what's going on, we kind of have to say, okay, well, we've seen this administration before. We kind of have an idea of what's going to happen. We do know that tax code policy is going to be one of the first things that gets tackled because it expires at the end of the year.
Right.
And you're likely to only have, if we look at it from a political perspective, likely to have full control for the Republicans in the House, Senate, and presidency for probably only 2 years. Demographically, usually things shift, and at least one of them go to the Democrats. So in that situation, you're going to see a fair amount get done in the first 2 years. You're going to see an anti-regulatory stance, and you're likely to see some tax policy out of there. Now, the most recent thing that kind of throws a wrench in everything is, Trump said, well, maybe we'll just abolish the income tax.
Right.
I think that's unlikely that occurs. If that would be a path that they would really strongly look into, the markets might be a little spooked by that. And, I don't know how they're going to, bring in revenue there. They said maybe a consumption tax. That would change things significantly and involve a much larger conversation.
Yeah, I think it's important for people that that seek our advice and that listen to the podcast here to understand why we have to stay agnostic when it comes to political issues. And the reason why is it's not because we don't want to have a conversation or because we don't have views on things. It's because our job is to objectively manage money and manage wealth of our clients. And you can't do that as effectively when you are leaning because of preconceived opinions or thoughts on things. You have to just look at it in terms of saying, how does X affect Y? How does this policy affect markets? How does this policy affect corporate earnings and things like that? And so that's the reason why we have to stay agnostic. And I think it's important to make that distinction. But speaking to your other point of taxation and we'll even say taxation / tariffs, right? Because I think that's those are very prevalent topics in the media right now. My take on it is that I think that they know that the tax code that we're on right now expires at the end of this year. They know that there's going to be a fair amount of fighting and horse trading that has to go on. And so I think you're going to hear a lot of things kind of get thrown out there because it's almost like putting cards in your hand, right? So if you throw these things out there, whether you believe or not, don't believe that these things can actually happen, it allows you to be able to say, okay, I'm going to throw this thing out there, and then I'm going to negotiate it away as a concession, right? So I think that this isn't uncommon within politics, and I think it's important to realize that so that we don't kind of bite at a headline and go, oh, okay, oh my God, like they're going to make this huge change with income tax, or they're going to make this huge change with overtime pay, or they're going to make this huge change with whatever it might be. I think that until they get down to actually negotiations, it's hard to believe a lot of what's being bantered about right now. I think it's just a lot of shadow boxing and kind of throwing out of phrases and terms and as ways to be able to kind of get to an end that isn't nearly as far-reaching as what maybe the comment was that was made a month ago or 3 months ago or 6 months ago or whatever it might be.
Yeah, a couple comments that I would have on that. I mean, usually when Donald Trump says something, he kind of means it and he does it. It's not really a surprise. But along the way, he says a lot of stuff, right? So, in a lot of things, you got to throw out some of the stuff or you have to, what gets said gets kind of molded into what becomes the policy. So,
or understand that a lot of it won't happen.
Exactly. I mean, some of it's not politically possible, right? To have just a tariff-based system would be potentially completely untenable, or I don't know how you'd really work it out. It's far beyond my pay grade. So I would say that you're likely to see a more traditional income tax policy, that gets implemented, and it'll be largely, we think, that'll be largely the same as what you see today, with some tweaking around the edges. They're going to have to find ways to raise revenue. I think, certain things like the backdoor Roth might leave us. There'll be some certain things that get kind of like sewn up around the edges, and largely you'll see a lot of the same principles that we have seen. Maybe we're wrong. Yeah. Maybe it all goes to a consumption tax and everything changes, but I think that would be doubtful.
Yeah, I think it's in our opinion, the margins are too small in both the Senate and the House to be able to get all of that done. You've got to wrangle a tremendous number of people together on one page to be able to try to get something like that done. That seems to be a bridge too far. And I also think you're right. I think that we've seen from the first administration under President Trump that there's a lot of threats. And some of it comes to fruition, and a lot of it doesn't. I think that the majority of people would prefer that legislation and just politics doesn't get practiced in that way, but that's his chosen way of doing it, and so that's the kind of environment that we're in right now. I think our overall message is to say, let's not necessarily just go with what a headline says. Let's talk about it. Let's have a conversation, and let's see what we think might be the impact to each individual person, as opposed to, whether we agree with it or not, kind of almost doesn't matter. What's going to happen is what's going to happen. I think it's just understanding the impact of what's going to happen.
Exactly. And your own personal portfolio is largely different from somebody else. Say you have a whole bunch of tax deferred money and somebody has a pile of taxable money, and we could have wildly different recommendations for the two sides. I mean, one has to manage to taxation and one could overhaul their portfolio with a click. So, there's some constraints based on some of that, and some conversations that we're probably going to have with some clients too is, if your positions have run up and your technology positions have done really well, is it time to pull some of that back? Well, if you do that, you're going to recognize some capital gains. And do you want to pay tax on that?
Right.
And so there's many different things that come into our conversations. There's always good and bad in every decision that we make.
Yep.
If you run away from this, what we see as kind of overvaluation right now, and we have 2 more great years in the market, how
Right.
are you going to feel?
Right.
That's what we always tell people, is that these cycles last longer than people think. And so we can be overvalued for a long time. And we can be undervalued for a long time, just like the international markets have looked undervalued for a decade, and they just seem stuck in reverse right now. And oftentimes when we're ready to throw in the towel, and I've said, we've had conversations about international stocks. Why do we even own these things? The second that your patience is like out and you make a move is usually when it moves the other way. So you just have to be mindful that you don't do anything that's too rash, but we also know and expect what might come down the pike.
Yep.
And that is that, we might not have the best market in 2025.
Right.
And a lot of it doesn't really have anything to do with politics. It really has everything to do with the business cycle and earnings and where we're at today and inflation and all of that. And a lot of that is apolitical. A lot of that is just where we're at in the cycle. And so, we kind of need to divorce ourselves from those 2 ideas too, about whether you love the president or don't like the president. It doesn't really matter. What we look at is the business cycle when we talk about investments.
Yeah, and I think that's the takeaway. We wanted to do this podcast because it's timely and it's important, and there's a new set of circumstances that we have to digest and understand. And what we want our clients to do and our prospective clients to do is talk to us about it. Don't sit and fret and be concerned and not know which way to go. That's why we're here. That's why you have us. So call us, make an appointment, come in and talk to us. Even if it's just the idea of the discussion alone, we want that. We think that that's healthy, and we think that it makes people better investors when we can talk about some of these ideas and understand what it might have as an impact on your portfolio. So thank you so much for tuning in, and we look forward to another episode of Gimme Some Truth shortly.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.